Hello and welcome. In this video, we will learn about the components of a balance sheet. If you are a student of commerce, then this video would refresh your memory. If you are someone new, someone without a commerce background, then please grab a piece of paper or book along with a pen and make sure that you take note of the things that you learn in this video. Okay? Now, every company has a balance sheet where they list out the assets and liabilities. Okay? Now, what is an asset? Assets are the things that the company owns. Okay? Liabilities are the things that the company owes to others. Alright. So now let us go in detail and learn about assets and liabilities. What are assets? Assets are the things that the company owns or the things that belongs to the company. For example, these. Now let us learn each one in detail. Okay. First is cash. If the company has deposited some cash in a bank, then it would count as an asset because the cash belongs to the company. Alright. If the company has invested some money, then that investment would be an asset of the company because it is company's money that it has invested in other instruments to get better returns or to get money. Why do we invest? We invest money so that we can earn money. Correct? Same is the case here. If the company invests its money in various places to earn money from it, then it would be counted as asset. Next is inventory. See, when we consider a company, it would be making products and selling it, correct? The unsold product, or I can say the yet to be sold products, which are lying in the company, along with the raw materials which are already procured to prepare the products, counts as inventory. So this would be considered as asset because it is property of company or it belongs to company. Okay. Next is office equipment. All the equipments belonging to the company used in office, just for an example, are assets. Next, if we consider a company, it would be having lots of machineries, correct? To produce the product or to pack the product or to do some work. So all those machineries would be considered as assets. Next, real estate or the land that the company owns or the land that belongs to the company or the land on which the company has constructed building or the free land which is somewhere else. So all these would come under the head of real estate and this would be considered as an asset too. Okay. Next, company owned vehicles. If the company has any vehicles, then it would be considered as an asset. Okay. So this is just a small list. I have made a list of the items which I thought would make you relate with the concept. Okay. Apart from these, there are many others too. If I list it out, it will just confuse you. You'll get hang of it as you proceed through the video series. Okay. Now if we consider your personal assets, then the money that you have in your bank account under your name would be your asset. Your mobile phone, your your bike, your car, or any electrical equipment that you have in your house would be considered as asset. If you have any buildings and if you have rented out it to someone, then that building would be considered as an asset because you are getting money from it. Correct? The land that you own would be considered as your asset. Alright? So all these would be your personal asset. Similarly, these are the assets of a company. Okay? Or these are the things that belongs to a company. Next is liabilities. Liabilities are the things that the company owes to others. Or I can say the liabilities are the things that the company has to give someone else. Or I can say the things that does not belong to a company are liabilities. Alright? For example, these. Let us say that a company has taken a loan from a bank for its operations, let us say. Then that loan has to be repaid to the bank, correct? With interest. It has taken the money belongs to the company, but then the money has to be repaid, the loan has to be repaid along with interest over a period of time, correct? So that would be considered as a liability. Alright? So bank debt would be liability. Next is mortgage debt. If the company has taken loans to buy land, then it would be coming under the head of mortgage debt. The debt or the loan taken to buy real estate is mortgage debt. The company should also pay this off, correct? Or also return this back to the bank or financial institution from where it has got it. So that would be considered as liability too. Next is money owed to the suppliers. You see, when we say company, what does it do? It takes raw materials from suppliers, from various suppliers, and manufacture the product at their company, correct? Location. So the suppliers who supply raw materials to the company must get money, right? So the suppliers must be paid for whatever raw material they give to the company. So that money which the company has to pay to the suppliers would be counted as liability. Okay? Next we have bills to be paid. We have electricity bill, we have water bill, we have, let us say, garbage disposal bill. So all the bills that are to be paid comes under the head of liabilities. Next, when we say a company, it would be having workers, and the workers should be paid their salaries or wages. Okay? So the wages or salaries that are to be paid to the workers comes under the category of liabilities. Then the company has to pay tax to the government. So the tax owed to the government would be liability. And finally, equity or the shareholders' money is considered as a liability. Okay? Now, why is equity considered as a liability? We will see this in a few minutes. Alright? I hope it is clear. Now, if you look at a balance sheet in any website, it would not be looking like this next to each other. They would have liabilities at the top and assets at the bottom. So this is how a balance sheet would look like. Alright? Yes. Now, here is the thing. You see, the bank debt is nothing but the money taken as a loan from bank. The company can take a loan and deposit the money somewhere else, somewhere where it can get higher returns. Okay? You see, the same money that the company takes as a loan from here can be kept here, meaning the loan can be utilized in many ways. The loan will be a liability, but the way the company utilizes it would be assets. For example, if it keeps the loaned amount as deposit somewhere else for higher returns, then the cash would be asset of the company. If the company takes loan from the bank and if it buys machinery, then the loan would be considered as liability, machinery would be considered as asset. If it takes loan and buys office equipment, then the loan would be liability, office equipment would be asset. If it takes mortgage debt and buys land, then the mortgage debt would be liability and the real estate would be asset. Alright, I hope you get the idea. So, this and this would be balanced. Okay, that is why it is called as a balance sheet. The liabilities and assets would be balanced in a balance sheet, meaning if the liabilities add up to a total of 500 crore rupees, then the assets would also add up to a sum of 500 crore rupees. If the liabilities are of 2000 crore rupees, then the assets would also be of 2000 crore rupees. In other words, the assets and liabilities would be balanced. There is no way that this and this will be different. We do not have an unbalanced sheet. We always have a balanced sheet. That is why the name is like that. Okay, I hope it is clear. Now, I told you that your bank balance, your mobile, your car, your bike, your land would be considered as asset. Now, what would be your liabilities? The bills that you have to pay. Electricity bill, you have to pay your electricity bill, correct? Every month. So that would be your liability. You have to pay tax to the government every year, so that would be your liability. Let us say you take water and you have to pay water bill, that would be your liability. You have to pay your children's fees, that would be your liability. Okay, so these things would be your liabilities, just for the sake of making you understand the concept. Okay, so these are the liabilities, some of the liabilities of the company, and these are the assets of the company. Okay, I hope you get the idea. Now, we will learn why equity is considered as a liability. You see, if the company has to grow, it needs money. And there are two ways to get it. One is to take loan from a bank, or one is by giving shares to the public. Let us say that the company takes loan from a bank. If the company takes loan from a bank, then the bank expects the loan to be repaid within certain duration with interest. Right? The loaned amount is to be returned to the bank. Now, it does not matter to the bank whether the company is doing good or not. whether the company is in profit or loss. Even if the company is in loss, or even if the company goes in loss after taking loan and after investing, the banks will still demand for the repayment of loan. Correct? The banks will not say to the company that, okay, so you are in loss now, you don't have to repay the loan. The banks do not say that. They expect the money. They do not care if the company grows or not. Whereas, if the money is raised by equity, then this money which has been raised by equity need not be returned to the shareholders. It matters to shareholders whether company is in profit or loss. See, only when the company is in profit or only when the company grows, the shareholders will make money. If the company is in loss, then the share price decreases and shareholders lose money. Correct? That is how the stock market works. So this equity is not expected to be returned to the shareholders. But then we have this one more sentence: until the company is working. Okay, we have a condition here, not sentence, a condition, until the company is working. Now, what does it mean? Let us say that the company closes down. The company goes bankrupt and closes. So, when the company closes, it has to repay the loans, it has to repay the things that it owes to others, it has to pay taxes, and whatever is left would be distributed among the shareholders. Okay? After paying the things that it has to pay to others, the remaining should be paid or would be paid to the shareholders. When is this done? When the company goes bankrupt or when the company closes down. Until the company is working, shareholders' money need not be returned to shareholders. Only when it closes down, it has to return. So, even if the money from equity belongs to the company or will be with the company, it has to be returned back to the shareholders when the company closes down, because it is their money, correct? Shareholders' money. So, the equity is considered as a liability. What is a liability? Liability is something that the company doesn't own, or the things that belongs to others and not the company is a liability, or are the liabilities, correct? So here the money from equity belongs to the shareholders. Shareholders are the ones who gave their money to the company. Of course, the company uses it for its operations. That is, still it is working. When it closes down, it has to return to the shareholders, and so it is considered as a liability because it doesn't really belong to the company, it belongs to the shareholders. Okay, so that is about debt and equity and why equity is considered as a liability. All right, I hope it is clear. Now let me go to moneycontrol.com and show you how to access the balance sheet. Okay. Alright, so I am at moneycontrol.com. So here, let me select any random company. I will click on Yes Bank and I will go to financials. Click on financials here. So I'll go to balance sheet and let me close the ads. Yeah. So I'll go to balance sheet and you can see here we have equities and liabilities at the top. and then assets at the bottom. Okay, this is because I told you that equity is a liability. So they say equities and liabilities. So equities and liabilities still here and assets here. Okay. Now what is share capital, what is reserves and surplus, what is deposits, what is borrowings, we will see all this later. Do not worry about this. Okay. So I hope you got the idea of what are assets and liabilities. I think that is enough for this video. I'll see you in the next video. Till then, take care and thank you for watching.